Ni hao. Glad to be here. Imagine a world where 2 billion people are unbanked, which means that they don't have access to a bank account. What if I also told you that the same people include all women in this room, or at least less than 47% of women in the world have access to a financial account? Or that 55% of people in developing economies borrow informally from friends and family, not from a bank? What if I also told you that nearly 60% of adults in developing economies also do not have access to a financial account? But this problem, folks, is not actually just personal. It's also a business problem. The small and mid-sized enterprises, according to the World Economic Forum, have a funding gap of nearly $2 trillion. $2 trillion, you heard right. Would you want to live in that world? And what are you going to do about it? Well, before we get too far ahead of ourselves, let me tell you who I am and why I'm here. Yep. One important fact, and the controller was not working, so is that 2/3 of these unbanked actually have access to a mobile device. And so if they are, we can reach them. We can provide financial services to them. This is my background distilled to one piece of paper, you could say. So as you can see from the top left-hand side, I studied biomedical engineering. And subsequently, I spent over a decade in Wall Street, working at top investment banks and asset managers like Goldman Sachs and BlackRock. But perhaps the one thing that defines me the most is that I've been an entrepreneur for as long as I can remember. It's in my DNA. My very first business as a kid was actually to wash the labels off of bottles and sell them to a honey maker. That was missing when I was working in New York. And I was not feeling like my work was adding value to society, otherwise known as social impact. So you could say, okay, Amilcar, why don't you walk the talk? What are you doing about it? And so let me tell you what I've done. When I was in the middle of my MBA at Wharton, I started armed, call it, with a 3D vision to disrupt financial services by democratizing access to financial services and by demystifying financial products. That was called Bucksprout, which was one of the earliest digital financial advisors in the US. However, what you can see on the right-hand side of the slide is a lot of entrepreneurship and a lot of FinTech work, which I'm obviously passionate about. I have gambled my entire life savings on this problem, not only on the onset of financial technology, but also sharing with all of you, because I believe that this is a problem that is not only my problem. It actually is a problem that everybody here may have or may know somebody who has that problem. And so what I did about it also to help the small, mid-sized enterprises, which generate 28 million of the jobs, there's 28 million of the small, mid-sized enterprises in the US, which actually generate the majority of the jobs. 98% plus of the jobs in the US are generated by this segment. And so if you think about it, there could be many, many ways of helping these SMEs gain access to capital. And there are studies by the World Economic Forum, the IMF, and the World Bank, which suggest that if you provide access to capital for the SMEs, or the small, mid-sized enterprises, you are thereby creating additional jobs, you're providing income, you're providing food on the table and opportunities for education. And that's what I called a quadruple bottom line. Why? Because the economy also wins, and the country wins, and everybody wins as a result of being in a flat world nowadays. And so here is what I call the periodic table of social impact that we created at FundPass, which was a very simple solution, 2 lines of code, so that any SME can raise capital from anyone by converting their own customers into investors. And so as you can see here, you could apply the same technology to just about anything. And this is thanks to new securities laws and also technology, in this case, financial technology. So let's cover a little bit about financial innovation in America. And the reason why I want to cover that is, as you can tell, I'm passionate about this problem. But just like every other entrepreneur out there, you have to go through the thick and thin of what you're passionate about. I had imagine yourself spending Chinese New Year's with $8 in your pocket, or receiving a term sheet from an investor for $2 million and suddenly losing it through no fault of your own after working on it for 3 months and then having to fire everyone. But now, I'm not here to ask for your pity, because I've done quite well. This is actually my 3rd trip to China in 45 days, and I'm very happy to be here to actually share what is financial technology, what is financial innovation, and why it actually matters. So let's begin with a digital financial advisor. A digital financial advisor is effectively a set of algorithms that would enable you to manage your money. And one example of such company is called Betterment. These digital financial advisors are known as robo-advisors. Truth is that the very first one came out 20 years ago, and it was pioneered by Bill Sharp, a Nobel Prize winner in finance. What did Betterment do, and why am I presenting Betterment? Betterment has actually cracked a problem in terms of helping small accounts, because a lot of the unbanked and a lot of the millennials may not have money. So they lower the minimums, and they also do not charge over 1%. They actually charge 0.25% of your money. The other thing that is also important is from a behavioral finance perspective, to understand that Betterment enables you to save money for particular goals. So please raise your hand if you have goals. Maybe I'm going too fast. Maybe you didn't understand it. But I think that everybody has goals. So you can save for your retirement, you can save for a major purchase, you can save for a vacation, or just simply to grow your wealth. So that's one of the examples of financial technology, which is digital wealth management. I'm pretty sure that everybody here in the room has used WeChat or Alipay, at least in the last 24 hours. Please raise your hand if you haven't. Well, you have. Everybody has used it. Exactly. And so that's one area, payments, or mobile payments in general, where China is doing way better than the rest of the world. Problem is, I don't have access to it because I'm not a Chinese citizen, or do I have a Chinese bank account. But I would love to, pay with a QR code. So that's payments. We covered digital wealth management earlier. How did digital wealth management enable smaller accounts to get access? Well, I gave you the perspective of crowdfunding and how folks could actually invest in a startup or a restaurant or a scientific project, perhaps to eradicate cancer. Well, each one of those represents a fractional share ownership of a project for which you either have passion or purpose or simply profit. Either one, it's fine. But fractional share ownerships, as the beginning of the talk mentioned, happens to be how you could actually get exposure with, let's say, $1,000. Well, you're not going to invest 17% of your money in Apple, or I hope you wouldn't. But if you have $1,000 to invest, through fractional share ownership, you can get exposure to a broad set of stocks and bonds and other types of financial securities because of technology, because of subledgering. At the end of the day, it's because of FinTech. What if I told you that you now can pay for 1 mile of insurance? Not a full month, but 1 mile of insurance. And this is a result of insurance technology, which is another segment within FinTech. And what that means is that as the onset of FinTech continues to develop, as you've seen in some of the previous examples, not only are we helping the unbanked, or we're providing technology solutions to reach those folks that were historically underserved. So this is one example to where if you couldn't afford to pay insurance for a full month, why don't you just pay for the 2-3 miles that you're going to drive? Okay, how many of you have heard of blockchain? Please raise your hand. Fantastic, so there's quite a few. So I need to explain blockchain before I actually give you some concise examples. So let's start at the top left. Let's say A wants to send money to B. So one thing that we should all know is that in blockchain, everybody has a copy of the ledger or the database, whatever you want to call it. It is a distributed ledger, so every single one of you here in the audience can have that copy of the ledger. That is important because as a transaction gets recorded, you would all validate that transaction. And you're validating it through what's known a consensus mechanism. That then becomes a block. The block gets executed, and then money is transferred from A to B, or information could also be transferred from A to B. Subsequently, that gets added to the blockchain. That's why it's called blockchain. And then that transaction gets networked, or effectively approved plus distributed to the entire network. So what are examples of things that blockchain can disrupt? Well, we all have probably identities. We all have ID cards, passports, etc. Blockchain can help some of the same unbanked people become known. Instead of staying in the darks without an ID or without being known, they can actually have access to an identity. They can have access to a passport, perhaps, online through blockchain. In financial services, one of the impacts of blockchain is in remittances. So there's companies like Abra or Chain and other blockchain companies that are enabling folks to send money from party A to party B without an intermediary and completely for free. That also helps not only the unbanked, but everybody else who actually wants to use that technology. Imagine the world where you have now 8 banks and they're trading with each other. There's usually a middleman, a counterparty that sits in the middle. That not only creates high inefficiencies in terms of settling that trade, and I know that because I used to work at BlackRock, one of the largest asset managers in the world, and we would have to verify details of each one of these trades. And oftentimes they were wrong. Well, you can put those agreements into what's known as a smart contract, so they can be automatically verified and settled instantaneously. So that reduces also the cost of trading. But perhaps one example that I really, really enjoy is what would happen if blockchain is widely adopted in China for the purpose of logistics. So let's say we're sending a computer from here to London. We probably want to track along the way, is the computer in good condition? But if everybody has access to the ledger and everybody has access to the same information, those logistics become not only faster, but leaner. And at the same time, you're improving the transparency of the entire supply chain. And last but not least, you're also leveraging a lot more automation through blockchain. And the main reason why is because of these smart contracts, as I said. So think of a smart contract as something, an embeddable program that can be embedded, executed, implemented real time on the blockchain, a set of rules that upon a trigger happening, something else happens. So if we go back to the computer, the minute the computer arrives in London, what's going to be the next step? To pay party B to party A, right? The sender to the receiver. So that's another implication of blockchain. Here's another example in healthcare. What if we developed a new drug? And what if everybody here got access to the new drug because you needed it? And so how are you going to track adverse effects of those drugs? A lot of times, those adverse effects get lost. So if I incentivize, and I'm the pharma company, and incentivize everyone through tokens or rewards or any other mechanism through the blockchain, we can start recording adverse effects. Then you can layer on artificial intelligence and perhaps machine learning on top of it, and then figure out whether or not this drug would be successful or unsuccessful, or perhaps fine-tune your molecules based on that data that you collected. Okay, so one of the main themes that I want you to walk away with is that money is becoming much more social. Some of the examples I've given you before involve a crowd, as in a crowd lending to people, or a crowd, perhaps in this case, insuring people. So if all of you wanted to insure me, I don't know why you would do that, because as I said, I've been flying for the last 45 days, 3 times to China, and it's very, very busy. But either way, and I'm a little overweight, if you wanted to insure me, I will take your policy. And that typically, through this program, through Lemonade, which is the first peer-to-peer insurer in the world, would become 68% cheaper than if I were to get the insurance from another institution. Not only is that powerful, but it's also great from a finance perspective, because I'm also rewarded as part of a community for not having a historical issue, or what most insurance companies called moral hazard. I'm not incentivized to destroy my stuff. I'm not incentivized to burn anything if I am going to be getting paid some of my premium if I don't file a claim. So that's Lemonade, a peer-to-peer insurance company in the US. So I think you can understand that the crowd can lend, the crowd can invest or co-invest, the crowd can provide investment advice, and the crowd apparently now can also insure. So therefore, the future of a bank would really, really, really change, and what you know as a bank now would not be the same 10 years from now. So this is what I call the financial services in the future will be shared, not served. And what does that mean? It means that as we have more and more social networks that are developing worldwide, more and more people can send money to each other, more and more people can share information. But really, let's bring it back to those 2 billion people. Who are the unbanked? I told you, 47% of women in the world do not have access to a bank account. I don't want to live in that world. That world, to me, is unacceptable. And I wish that everybody would take matters into their own hands to help these people, to help the SMEs get access to capital. Why? Because that is directly linked to economic growth, and is also directly linked to the eradication of poverty. And I'm about to show you how. So let's first understand who are the unbanked. So is it right that if you're more wealthy or more educated, then you're more likely to have a financial account? I'm not so sure, but that is the reality. For those that are in developing economies that have a higher education, they're 2 times as likely to have a bank account. For the folks that actually have higher income, they're 3 times as likely to have a bank account. 3/4 of the poor in the world do not have a bank account. But if you think about it, if you give them a bank account, you can actually help them compound their money. They're not keeping it under the mattress, folks, right? That's what you want. Why? Because everybody would win. It's a quadruple bottom line. The more income you have, the more you can invest in education, the more you can put food on the table, the more you would stimulate the economy, the more everybody would win. It's also an age problem. For those aged 18 to 24, they're about 33% less likely to have a bank account. And roughly 40% of them do not borrow from a bank. Same issue over and over. Okay, so I've already mentioned some of the statistics, but the main one that I want to highlight is that even if you did not want to focus on the developing economies, and you said, okay, show me the data for the richest of the richest, it's right here in the middle of the slide in blue. 11% of those folks that actually have higher incomes do not have bank accounts also. I mentioned also briefly, why does financial innovation matters, and why does FinTech matter? There is something called a wealth gap, and the wealth gap is pretty much here in front of your eyes. This is data from the US. So I think everybody here can tell that 160,000 is about 16 times 10,000, and that's the wealth gap. Why? Well, because a lot of these other groups are unbanked, and also a lot of these other groups did not have access to the same households historically, and thereby they were not able to grow at the same rate as other groups, without mentioning anyone. If you don't have access to a bank account, how can you grow your money? Well, here's the example of what happens when you don't grow your money. For those folks that were actually banked, you end up with close to $20 after receiving $1 of additional income versus $4 from my fellow brethren. I think that's something that I can fix if I dedicate my life to it. 66 billion. It's not like there's no money to be made. If we said, okay, let's bank 10% of these folks, and each one of them saves $5 per month at 5% per year, in 5 years, we would have created 66 billion worth of new capital, new wealth, and I think that can not only help to move the needle in terms of reducing poverty, but also providing new opportunities for education and growth. So why does it matter in the end, Amilcar? And I think everybody will know by now, financial innovation can lead to economic growth and the reduction of poverty. And here's the direct link. So let's start with the people at the top. 2 billion unbanked. Why are they unbanked, and what do they need? They need a bank account. Why don't they have access to a bank account? Because of cost, because of distance, because of paperwork. Okay, what are the issues with the SMEs? How come there's a $2 trillion funding gap? It's the same issue, plus access to collateral, what you have to pledge in order to borrow. So if you help the 2 billion people at the top, you're reducing the financial literacy gap through the use of technology, you're reducing the income gap, and you're reducing the wealth gap. All 3 of those are directly linked, according to the World Bank, to the reduction of poverty. On the SME side, as I said, the quadruple bottom line, if you fund the small and mid-sized enterprises, you can create jobs, and you can stimulate the economy because you're putting income on people's pockets. You're also increasing productivity, and entrepreneurial activity also goes up. Net result is GDP increases. So what does the future of the bank look like? Boom, a safety box. Why? Because the crowd now can lend, insure, and provide advice. So if all of the services are taken care of, you would probably use a bank for something else. Yesterday, I talked to someone and said, I have not seen a cash bill for a year. He hasn't paid for, with cash for over a year. So we will become much more cashless, and also there will be a lot of pressure by technology companies on banks, the likes of BATS, Baidu, Alibaba, Tencent, or Amazon in the US, or Facebook, all of whom are actually providing financial services at this point. So I hope I have shared with you some new ideas as to how we can all make a difference to increase economic growth and to reduce poverty. Shaghai.